the much-awaited banking license guidelines are on its way. And let's go straight across to our banking editor, George Cherian, for all the details on that one. George, over to you.
Thanks, Nisha. So we have the final guidelines for new bank licenses put out by the RBI just now. What it says is that eligible promoters will comprise groups in the private sector, entities in the public sector, and non-banking financial companies. They will be eligible to set up a bank. So essentially, this is a climb down from the RBI's earlier stance that companies with with interests in the real estate space or the construction space or in the broking space will not be allowed licenses, and this is something that the Finance Ministry was pushing for. So it's a huge climb down on the part of the Reserve Bank of India on that front. So that, apart from that, there haven't been very many changes really made by the RBI. This is early details that we have. So what it is saying is it's the non-operative holding company will have to be set up by the promoters, which will have to be 100% owned by the promoters. The NOHC, or the non-operative holding company, will have to hold a minimum of 40% of the paid-up capital of the bank that it sets up. So this is, again, no change from the earlier draft guideline recommendation that the RBI had put out. Also, the promoters' shareholdings, as per the draft guidelines, was recommended in a staggered manner, where from 40% they would come down to 20% in 10 years' time, and then down to 15% in 12 years' time. Here, in the final guideline, what they've said is that the promoter shareholding will have to come down from 40% to 15% in 12 years. So they haven't put in that 10-year 20% clause. It goes straight down to 15% within 12 years. Foreign shareholding in the bank should not exceed 49% for the first 5 years. That's something that the RBI has put out in the final guidelines, and after which foreign shareholding in the bank will be as per the ruling FDI policy in banks at that particular point in time. Also, at least 50% of the directors on the board of the bank will have to be independent directors. This is again something that was suggested in the draft guidelines. 25% of the bank's branch network will have to be in unbanked rural centers. They've defined unbanked rural centers as centers with a population of up to 9,999. So essentially, places with a population of less than 10,000. The bank will comply with priority sector rulings, all of that. So, okay, so this is what we have as of now. I'm going to take it across to Anirudh, who may possibly have more details than I have. Anirudh, to you.
Certainly, George, as you mentioned, the biggest thing, of course, is the fact that they've climbed down from that particular ruling of not allowing real estate and broking companies to apply for the banking license. And, of course, a number of fit and proper guidelines are going to be put in place. As you mentioned, we have only the primary press release at this point of time. And they've actually said that 25% of the new bank branches will have to be in rural and unbanked areas. So, of course, that's one thing which promoters will have to keep in mind, the fact that they'll have to ensure that the financial inclusion benefits are maintained. Also, of course, the fact that they have to maintain close to 50% of their directors as independent directors is another key thing. The other thing, of course, as you mentioned, is the fact that the non-operative holding company will have to be set up by any entity that sets up for this banking license, and of course that is something which will have to be listed in due course. Also, of course, they've put out a procedure for giving out these licenses. There is going to be a time period between which whoever is interested for these licenses will have to apply to the RBI. These licenses will then be screened by a high-level committee, including the government as well as the RBI, following which the committee is going to put in those recommendations to the RBI, which will then issue an in-principle approval to all of the entities that it feels is fit and proper. Of course, that decision will lie wholly and solely with the Reserve Bank of India. Following that in-principle approval is going to be given for 1 year, and that, of course, is going to be taken forward as far as setting up the bank is concerned. At this point of time, there aren't very many details as to how many entities are going to be allowed to finally set up the bank, or whether there are going to be any particular entities which are going to be shown favor over the others. But clearly, the slant of the guidelines do seem to be suggesting that the RBI wants entities entities that are more interested in setting up a financially inclusive bank and banks that are going to be going further in terms of improving the presence of the banking network in the country.